very warm welcome to everyone. I am Shrija Agrawal and you are watching yet another episode of Mints Inside. We are going through interesting times to say the least. While there are political events happening which test our resilience as individuals, there are also events happening at the economic level which are testing our endurance and patience as corporates and investors. Talking about investors, there's one class of investors, essentially the private investors, which really came under fire post the VG Siddhartha suicide. I'm here in conversation with Rahul Bhasin, who is a managing partner in Bearing Private Equity Partners India, to talk really about everything, the economic slowdown, the macroeconomic indicators, how they're recalibrating the economic decision basis the GDP numbers that we have, and also about the relationship between the private equity investors and the promoters. Rahul, thank you for talking to us.
Always a pleasure.
Now, my first question to you really is that conventional wisdom really says that private equity funds and investors into private equity funds really chase GDP numbers. They go behind GDP. Now that we have this recalibration of GDP happening for India, how does that really translate into your investment thesis? And how are you looking at this economic slowdown, the gloom and doom scenario?
Look, just purely statistically speaking, the faster the GDP grows, the more probability that more entities within the that same ecosystem will be growing faster. And essentially, if you look at the private equity space in markets like India, or in fact across most emerging markets, it is inevitably growth investing. Whether one invests at the venture stage or in the minority stage in a private company or in listed companies, or you do buyouts, your primary driver of returns is growth. So if growth starts slowing down in an economy, the primary driver of returns for private equity declines. And therefore, for deal making to happen, necessarily there has to be a serious price correction in terms of entry prices. And that tends to not happen immediately, tends to take longer. So I guess what tends to happen is a little bit of a delay in the deployment of capital from the private equity space. Having said that, I think if you look at the biggest opportunities for people in the private, quasi-private markets, etc., it's always in the part of the economy where disruptions are happening at the most maximum. If you think about it, if you talk to general retailers, they say there's a slowdown. But if you look at the e-commerce sales, right, there's a massive growth which is taking place. If you talk to old style taxi companies in India, there's a slowdown. But please look at the growth of Ubers and Olas of this world, right? If you look at the old style hotel chains in this world, they have a slowdown. But if you look at the Oyo and the digital companies in the digital architecture, they are having a massive growth. So, and one can sort of expand this further and further. There are parts of the economy which are what I call disrupted by business model, disrupted by technology, but essentially where the price value equation for the customer is improving, you will always have disproportionate growth.
So I see a certain tilt towards the disruption economy from you, or the new economy per se. But how are the valuations? There seems to be valuation froth in that space. Of course you're seduced by this, but would you be interested in coming into these companies at this level?
Yeah, I think that is always a challenge and a trade-off. To start with, when I look at our own experience over the last more than 2 decades here directly, and from me personally significantly longer than that too, it's very clear that investors historically have overpaid for growth, right? So that is something that we are cautious about, and that one needs to think about. The other thing I think one needs to be very cautious about is that often disruption leads to benefits to the ecosystem, but 99% of that disruption value creation is captured by the customer of that industry and not necessarily by that industry itself. So one has to understand that dynamic and has to understand how market structures will evolve, not just how businesses will evolve. And that's, I think, a necessary part of getting our business right.
It's interesting that you mentioned Oyo. We recently saw this case of, a share buyback where the promoter actually did share buyback to consolidate his shareholding. And we also had this VG Siddhartha suicide, two disparate issues, but it really brought to light this entire thing of, so much pledging happening by corporates, where there's so much leverage happening. What really is your sense? Is it really a valuation game being played out where promoters are pledging not against the cash flows? What really is your sense there?
Look, there is a normal distribution of risk appetite, right? So what happens is with an entrepreneur who is inclined to taking that kind of risk, he always believes that his risks will succeed and pay off. Therefore, he's always abhors the concept of diluting himself. And as a consequence, he likes to over-lever himself, right? And this is not something to do with just the economic conditions abounding. But it is also to do with the psychographic profile of the entrepreneur, right? Where they believe that, whatever they are doing is going to work and is going to work dramatically well, and they don't want to dilute, therefore they will borrow, and they will borrow at high rates to sustain this. Now, to my mind, this is a reality, this is a dynamic, and I wish that lenders would be a little bit more cautious and circumspect as to how much they should lend and how much they should insist comes in the capital structure as equity. And I think that sometimes, especially in frothy markets, this balance gets lost.
Rahul, do you think entrepreneurs are treated fairly in this economy? Give us some sense there.
There is a normal distribution of risk appetite, right? By nature, entrepreneurs have more risk appetite, and I think that we must salute them for it. If they didn't have that kind of risk appetite, innovation is a very expensive game, right? Failure rates in innovation are very high. So you really need people who have a very strong sense of self-belief, who will take those risks to indulge in that innovation, and then that innovation creates productivity growth, it creates jobs, it creates, it's a very strong filament to our entire economic engine, right? And my own view is that I think that as an Indian society, we don't give the due that is, I think, is deserved by entrepreneurs generically. And I think that there's a socialistic mindset and its sort of hangover, and a lot of our politics being dominated by the leftist schools, a lot of our academic institutions being, largely populated by left-leaning economists, has led to this kind of outcome. But if you look at it, that's all reads very well. It feels very good. And I have to confess that I was a communist myself as a teenager. But I think that, when you actually study outcomes and you look at societies which have actually created wealth disproportionately and made everybody significantly richer, it is the free markets enterprise. It is those kind of economic systems which have rewarded the people who take risk and which have respected risk capital. I think that, therefore, entrepreneurs in India, we really need to step up the respect, recognition. I've said this before, but, to my mind, it's shocking that somebody like an Azim Premji, and I'm taking one example, who has done so much for education. Newspapers don't talk about him as a potential education minister, and political parties don't approach him for something like that, or in the tech space. And if you look at the tax contributions, if you look at how much he has donated personally and how much he has done for these spaces, it is extraordinary. Yes, people in the professional sphere recognize that, appreciate it. But if I look at the organs of society, which is the government, etc., I really think that, that recognition which is due is missing. And I'm just treating this as one example to a wider malaise of this nature, right? I think that, it's a very small percentage of our country which pays income tax. It's maybe 6% pay income tax today, but less than 0.5% probably pay 2/3 of the income tax in the country. Do they get recognized? I mean, besides one comment in the finance minister's speech, do they get their due in society? Because if you're talking about a society where that tax base is contributing not only to the entire government architecture that exists, but also to transfer payments to such a wide percentage of the economy, I think it's probably necessary that policies are made to facilitate that 0.5% becoming 1.5% or 3%, right? And the more you make policies like that, where you can actually grow the number of people who are generating income, the more you'll be able to do for the poor and the disenfranchised. And there is always, in any political system, there is always a trade-off between those who need help and those who are capable of helping. But in our own system, my own very strong belief is that we have gone too much into the direction of, doing for those who need help, to the extent that we are, instead of facilitating and catalyzing those who generate wealth and therefore taxes to the government, I think that we really need to incent that ecosystem far more today.
But
it's a correction which is required, and no one is ever going to get this right. But in terms of direction, I think that's where policy needs to move to.
So you spoke about this entire, fascination towards the new economy.
Mm-hmm.
You spoke about while there's slowdown on the old economy front. What about those business models?
Look, I think there is a vast case for that. And if you have very deep pockets and you know that you can be the last man spending, those become very attractive options, right? When you have more modest sums of capital and the amount of time that you have available is also restricted, I think one needs to be very cautious. One can still play that game, but then one needs to play that game in what I call the parts of the ecosystem where you know that subsequent rounds of funding are very highly likely to follow.